This is the live trading room of Jadu, a well-known Korean trading streamer. Just a few seconds ago, her full position in Korea's hottest 2x leveraged SK Hynix ETF was forcibly liquidated by the system because it hit the margin call threshold, wiping out over 3 million in assets in an instant. Right now, in this stock market crash that has erupted in South Korea, over 1.2 million leveraged accounts have been blown out, with approximately 320,000 to 360,000 accounts forcibly liquidated, wiping out their principal, and some even ending up in debt. This means that in a country as small as South Korea, on average, 1 in every 30 adults has been wiped out and lost everything in the stock market crash. Today, August 6th, South Korea's main stock index, the Kospi, collapsed again, plummeting nearly 5% in a single day and triggering its 46th circuit breaker of the year. You have to realize that just a few months ago, the South Korean stock market was the hottest bull market king in the world, crushing the US stock market with a staggering 50% surge in just half a year, leading the globe. How could something like this happen overnight? Is there some unknown insider manipulation behind this? Today, we'll spend 20 minutes talking about the entire process of this world-shocking South Korean stock market crash. In a small apartment north of Seoul, 32-year-old Park was originally just an ordinary office worker. His monthly salary wasn't much, and after deducting rent and the expenses of supporting an elderly parent, the numbers in his bank book were growing slower than stagnant water. A while back, his wife just got pregnant with their second child, and after the initial joy came a heavy, suffocating feeling. In South Korea, at the end of 2024, the economy was sluggish, the population was plummeting, and the Kospi index was lifelessly hovering around 2,500 points. At the time, Park scoffed at the stock market. Working people were barely scraping by, so who would want to be the fool throwing money into the capital market? What changed all of this was a political storm that hit in the second half of 2025. The new president, Lee Jae-myung, took office. This guy, Lee Jae-myung, has a unique trait. He started out as a retail investor himself. Before getting into politics, he was a day trader, and he's admitted that he spent years trading stocks. And, well, he always lost money. During his campaign, he even shouted a slogan that was treated as a joke by the entire South Korean financial sector at the time: "I will push the Kospi to 5,000 points." To prove his commitment, before the election, he directly threw 41 million won in cash into buying index ETFs and made a solemn pledge: if elected, he would invest 1 million won every month for 5 consecutive years. Everyone thought this was just empty talk from a politician. But after Lee Jae-myung took office, he actually implemented a series of policies. He launched a program called the Corporate Value Up Program, which Koreans call Value Up, while simultaneously lowering the securities transaction tax, cracking down on malicious short selling, and mandating that listed companies increase dividends and share buybacks. Once these policies were rolled out, combined with the backdrop of the global AI boom, the performance of Samsung and SK Hynix started to skyrocket. In the first quarter of this year, SK Hynix's operating profit margin hit an incredible 72%, with its single quarter profit directly crushing its entire performance for the year 2025. In January of this year, the Kospi index was unstoppable, breaking through the 5,000 point mark in one fell swoop. The campaign joke Lee Jae-myung made back then actually came true. That was the moment Park's resolve started to waver. In the break room, colleagues stopped talking about K-pop and K-dramas. Everyone was glued to the red-hot stock tickers for Samsung and Hynix. At a college reunion, someone had actually made enough from this market rally to cover the down payments on 2 Seoul apartments. Even Park's wife brought him the news, exclaiming in shock that in the first 3 months of this year, the number of new stock accounts opened by minors under 18 in South Korea had surged nearly 10-fold. Even kids were trading stocks. The entire society was permeated with a pervasive sense of FOMO, the fear of missing out. Park couldn't hold out any longer. In May, he took the family's emergency fund and the retirement savings insurance his wife had been diligently setting aside for years, scraped together 30 million won, and dove headfirst into the stock market, buying Samsung and Hynix. This wasn't just one person's madness. Data from South Korea's Financial Supervisory Service shows that in the first 5 months of this year, the cancellation rate for pension insurance across the country surged by 62.7%, and the volume of fund redemptions increased by 146.1% year-on-year. In just the first half of the year, the household loans issued by South Korea's 5 major commercial banks already accounted for over 85% of the annual quota. The entire country is cashing out pensions, mortgage funds, and consumer loans, even risking default just to pour the money into the stock market. Brother Park's timing for entering the market wasn't actually wrong. On May 27th, in order to retain this massive influx of hot money, South Korean financial regulators approved the listing of 16 single-stock leveraged ETFs directly linked to Samsung and Hynix with 2 times leverage, both long and short. What does that mean? Before, if you bought Hynix stock and it went up 10%, you made 10%. If it dropped 10%, you lost 10%. But this new product is only linked to Hynix stock, and the gains and losses are directly magnified by 2 times. If Hynix goes up 10%, you can make a massive 20% profit. If Hynix drops 10%, then your principal will directly lose 20%. Brother Park entered the market under these exact conditions. Faced with the temptation of such doubled returns, South Korean retail investors went even crazier. In just 3 weeks, the leveraged ETF's assets skyrocketed from $3 billion to $9 billion, with retail investors like Brother Park accounting for 92% of the buying. In the break room, his coworkers patted Brother Park on the shoulder, beaming with pride. How much can you make buying the underlying stock? Just go straight for the 2 times leveraged Hynix ETF. If it goes up $1, you can make 2. This is God handing out money to us retail investors. Brother Park decisively opened a margin account, borrowed money from the brokerage, and maxed out his leverage in one go. The following weeks became the most disillusioning yet manic time of Brother Park's life. On June 18th, the Kospi broke through 9,000 points. On June 19th, the market surged to an all-time high of 9,385 points. SK Hynix had skyrocketed by 258% year-to-date, historically surpassing Samsung in market capitalization and completing the shift in leadership. Brother Park opened the trading app on his phone, his hands shaking uncontrollably. His account's floating profit was nearing 80 million won. He had never seen that much money in his entire life. That night, he specifically ordered expensive Korean beef, drank soju with his wife, and started browsing the listing prices for 3-bedroom school district apartments in Seoul. They felt that the gears of fate had finally turned in their favor. Friends, suppose you encountered a market like this, and your account suddenly had a floating profit of nearly 80 million won. What would you do? Would you sell immediately to lock in your profits and play it safe? Type A. Would you continue to add leverage, betting that it could double again? Type B. Leave your choice first. Let's see what Brother Park chose, and you'll realize that there's always a chasm between ideals and reality. Then the wind changed. On June 23rd, the nightmare arrived without any warning. The Kospi suddenly avalanched during trading, plummeting 9.99% and instantly triggering a circuit breaker. SK Hynix plunged 12%, and the 2 times leveraged ETF in Brother Park's hands crashed by over 20%. Brother Park's mind went blank, but everyone in the colleague group chat was saying this was just a correction, a golden opportunity to buy the dip, and that this was the perfect time to add to his position. Immediately after, Samsung and Hynix released impressive second quarter forecasts. Samsung's profits skyrocketed 18-fold, and Hynix's surged by 556%. Their performance was red hot. Brother Park believed this bull market wasn't over yet, so he added his final savings to his position. But he miscalculated. The nightmare arrived very quickly. On July 13th, the stampede broke out. The Kospi plunged 8.95% in a single day, and Hynix plummeted 15.4%, marking its largest single-day drop in history. That day, the total amount of forced liquidations across the market reached a staggering 344.2 billion won, kicking off a brutal margin call stampede. It was also on this day that Brother Park received a margin call from his brokerage firm. If he didn't add more money, his account would be liquidated immediately. Brother Park, on the verge of a breakdown, called his wife. On the other end of the line, his wife, who was pregnant with their second child, burst into tears. She then gritted her teeth, went to the bank, applied for a high-interest personal consumer loan, and plugged the hole. 2 weeks later, a highly ironic dead cat bounce occurred. On July 28th, the Kospi saw a record-breaking single-day surge of 17.9%, with Samsung skyrocketing by 28% and Hynix soaring by 30%. Watching his account value skyrocket, Brother Park excitedly hugged his wife and shouted, "We've made it! We won the bet!" However, this was just the final anesthesia before the beheading. Just 3 days later, on July 30th, the Kospi completely collapsed, smashing through the 5,593-point mark. In just 17 trading days, the market evaporated 40% from its peak, and Brother Park's double-leveraged ETF instantly hit zero. No, not just cleared out, it was annihilated. Not only was his $30 million in principal wiped out, but the consumer loans his wife had taken out and his aunt's baby formula money all vanished into thin air. After the risk control system mechanically liquidated his positions, he discovered he still owed the brokerage firm over 8 million won in debt. That day after work, it was pouring rain in Seoul, and Brother Park sat alone in the dim underground parking garage, smoking an entire pack of cigarettes. He looked at the voice message his wife had sent on his phone, his hands trembling. He didn't dare to open it, and even less did he dare to go home. By today, August 6th, the Kospi had plummeted another 4.58%, triggering a circuit breaker once again. Beneath the flashing red and green market boards of Seoul, there are hundreds of thousands of other South Korean retail investors like Brother Park who have fallen into an bottomless abyss. At this point, you must be wondering, why did the South Korean stock market crash so hard and so fast this time, to the point where it was completely beyond saving? First of all, the DNA of the South Korean stock market has been deformed from the very beginning. In a normal country, a stock index is composed of hundreds or thousands of stocks. If one sector is down, another can pick up the slack. It's about diversifying risk. But the South Korean Kospi index isn't like that. The combined market capitalization of just two semiconductor companies, Samsung Electronics and SK Hynix, accounts for more than half of the entire Kospi index weight, and at one point it even reached 50%. According to statistics, 70% of the KOSP's overall growth rate in 2026 was contributed by these two companies. In other words, the South Korean Kospi is essentially not a national stock index, but rather a semiconductor duopoly index. When you buy a Kospi ETF or a South Korean active fund, you're actually just buying these two stocks. As soon as the share prices of these two companies fall in tandem, the entire market collapses simultaneously. By then, retail investors won't even have the chance to find a safe haven or switch to other sectors to hedge their risks. This is a fundamentally deformed market structure. In modern society, many friends keep an eye on the stock market, exchange rates, and the international situation every day, all in the hope of protecting their wealth. On top of this deformed market structure, what's even more fatal is the extremely crazy leverage nesting doll game played by South Korean retail investors. I know many friends get a bit dizzy when they hear the word leverage, so let's use buying a house as an analogy. Suppose you want to buy a house for $1 million. You put down a down payment of $300,000 yourself, and the bank lends you $700,000. That loan from the bank is the leverage. But the game South Korean retail investors are playing isn't this kind of ordinary leverage. How did they do it? They first borrow money from brokerage firms to buy stocks, which is called margin trading, and it can reach a leverage of up to 2.5 times. Right now, the total margin balance in the South Korean market has hit a historic high of 38 trillion won. After borrowing the money, they don't buy ordinary stocks. They specifically go for the 2 times leveraged ETFs we mentioned earlier. Since the ETF itself already carries 2 times leverage, the actual leverage ratio can skyrocket to 4 or 5 times or even higher. Finally, they layer on short-term credit and futures, all of which are high-risk options and loans. With these layers stacked one after another, the actual leverage in the hands of retail investors can skyrocket to 10 times or even dozens of times over. This means that if the stock drops by 10%, the account will be wiped out instantly. If it falls by 20%, not only will they lose everything, but they'll likely end up saddled with a mountain of debt. But if they win, if the stock goes up even a little, the gains are massive. And the most desperate part is hidden within the mechanical risk control mechanism behind this double leverage fund. Many retail investors think that by buying these leveraged funds and holding on, they can always wait for the stock to rebound, but they have no idea that the financial institutions issuing these leveraged products must perform a mathematical exercise called position rebalancing before the market closes every single day. In layman's terms, as soon as the stock price drops, the fund's back-end computer system, in order to maintain that double leverage ratio, is forced to passively sell off the stocks it holds according to the rules. Mind you, this is entirely automated by computer programs. It doesn't care if the company's performance is good or bad, it doesn't look at whether there are favorable policies, and it doesn't care whether retail investors live or die. If the contract code says to sell, it will sell the stocks as needed based on the stock's price fluctuations before the market closes, dumping them into the market. When all these poisons are linked together and mixed, it triggers a death spiral. At first, it might just be a tiny piece of bad news coming from the US stock market. For example, today, the major US memory chip manufacturer SanDisk released an earnings report that fell short of expectations. When foreign investors saw that, they thought, oh, it seems there's a shadow over AI profits, so they took off running and started dumping shares of Samsung and SK Hynix en masse. Once foreign investors start dumping, the stock prices of Samsung and SK Hynix begin to fall. When the stock price drops to a certain level, the computer systems of 2x leveraged funds trigger an automatic sell-off mechanism, dumping massive amounts of stock into the market. This selling pressure pushes the stock price down even further until it hits the liquidation threshold for retail investors. Then the risk control systems of the brokerage firms kick in and start liquidating positions in bulk. The brokerage firm's risk control systems will kick in and start mass force liquidations, dumping the holdings of hundreds of thousands of retail investors onto the market at market price. We need to explain this part a little bit. For example, let's say investor A has $100,000 in principal and borrows another $100,000 from a brokerage firm, giving him a total of $200,000. He uses all of it to buy stocks, so those $200,000 worth of stocks serve as the collateral he has pledged to the brokerage. If the stock keeps falling and falling until his $200,000 worth of stock is only worth $110,000, this means that after paying back the $100,000 he owes the brokerage, he only has $10,000 left of his original $100,000 principal. At this point, he has hit the liquidation threshold. Now, the brokerage isn't a charity. To ensure the $100,000 they lent out doesn't get lost, their back-end risk control system won't even ask for your permission. It will automatically trigger a forced liquidation, selling off all the stocks in little a's account at the current lowest market price. The money from the sale is taken by the brokerage to pay off the debt, and whatever is left, maybe just a few thousand in pocket change, is returned to little a. Basically, little a's principal is wiped out. Just think about it. Hundreds of thousands of retail investors across South Korea are all using leverage and borrowing money. When the stock price is pushed down to this line, tens of thousands of risk control computers trigger simultaneously, selling off all the remaining stocks held by hundreds of thousands of retail investors. This sell-off pushes the stock price even lower, which then triggers the liquidation line for the next group of people. The more it drops, the more they sell. The more they sell, the more it drops. This is the death spiral that actually happened this time. The data confirms just how terrifying this process is. The 2x leveraged Hynix ETF dropped more than 80% within a month, starting from its high on June 23rd. A similar leveraged ETF tracking Samsung Electronics fell nearly 75% from its peak on June 3rd. In the single month of July, the total market capitalization of the Kospi in South Korea evaporated by over 2,116 trillion won, a figure equivalent to South Korea's entire GDP for the past year. An entire year's worth of a country's GDP evaporated from the stock market in just 1 month. Some friends might wonder, with a stock market crash this massive, couldn't the South Korean government or the Blue House do anything about it? If we shift our focus from the stock market to the political level, you will find that the South Korean government is not the firefighter coming to save the market in this drama at all, but rather the biggest gambler in the stock market. Recently, some friends have told us that they often don't receive notifications after subscribing. Because YouTube's algorithm rules are constantly changing and upgrading, you need to search for and click to watch our true viewpoints more often, so that it knows you want to stay updated with my content, and then it will continue to push it to you. So I'd like to ask you all for a small favor. Please type the words "true viewpoints" into the search bar and search for it a few times. By searching and then clicking through to watch, you can help our channel grow better and help recommend the videos I've worked so hard on to more friends. And I'd also like to remind you, if you've watched this far, please give me a like. New friends, welcome to subscribe to True Viewpoints, and don't forget the hype feature for fan recommendations. Let's get back to it. On June 29th, 10 days after the Kospi hit a historic high of 9,385 points, South Korean President Lee Jae-myung hosted a press conference at the Blue House called the Republic of Korea Great Leap Forward, Three Major Super Projects National Report Meeting. This press conference was a landmark project defined by the Lee Jae-myung administration. Lee Jae-myung put it this way: semiconductors, physical AI, and AI data centers are the three pillars for South Korea's next 20 to 30 years, and South Korea must push forward with the full strength of the nation. Let's take a look at the scale of this full strength of the nation effort. The government's total investment is expected to exceed 2 quadrillion won, and on top of that, companies are required to provide matching long-term investments, bringing the total scale to 4.7 quadrillion won. This figure far exceeds the entire annual budget of the South Korean government. On the corporate side, Samsung Electronics and SK hynix have been pushed to the forefront, jointly announcing plans to build 4 semiconductor wafer fabs in the southwestern region of South Korea, with a total investment reaching as high as 800 trillion won. The government has also made supporting commitments, stating that it will invest another 30 trillion won over the next 15 years into the entire semiconductor R&D chain, and by 2035, it will pour over 1 quadrillion won into building AI data centers. So you see, in Lee Jae-myung's vision, this is a massive gamble that stakes South Korea's national destiny for the next 20 or 30 years entirely on semiconductors, on AI, and on 2 companies, Samsung and SK hynix. But what's even more subtle is the political motivation behind this. The opposition party is criticizing it, calling it the worst kind of state-run economy. Why would they say that? We'll keep listening. When you piece all these clues together, this is the picture we see. The Lee Jae-myung administration, on one hand, is pushing the Value Up program, lowering stamp duties and authorizing double leverage funds. His fundamental goal is actually to artificially manufacture a bull market to suck as much as possible of the pension funds, mortgage money, and consumer loans of ordinary people like Brother Park into the stock market. When the stock market bubble is inflated to its max, the market surges, and the market caps of Samsung and SK hynix soar to all-time highs, well, the government can then naturally say, since your market caps have risen this much, isn't it time to make a contribution to the country? So Samsung and SK hynix promise to pour hundreds of billions of dollars into massive construction projects, expanding wafer fabs and data centers. Most importantly, at the press conference we just mentioned, the Lee Jae-myung administration forcibly mandated that these massive investments of hundreds of billions of dollars must be prioritized in the southwestern region of South Korea. This region holds significant political meaning. The opposition party claims that in the presidential election, a full 85% of voters in the southwestern region cast their ballots for Lee Jae-myung. So this isn't about a market economy or stimulating economic development at all. It's the administration forcing conglomerates to spend money to gild and pay for the ruling party's stronghold. In this seemingly perfect scheme, Lee Jae-myung thought he had mastered a perpetual motion machine. As long as the global AI boom didn't fade, the stock market could keep rising, retail investors would be overjoyed, conglomerates could use their market capitalization to build factories, and politicians could reap political achievements and votes as a result. However, when the returns of US AI giants are questioned and foreign capital dumps their holdings and pulls out, this national-level gamble built on leverage will collapse in an instant. And this time, it is the direct manifestation of this national-level gamble collapsing. The cost of losing this high-stakes gamble isn't borne by politicians or tycoons, but is placed squarely on the shoulders of those 320,000 ordinary retail investors who were forced into liquidation and lost everything. All right, that's all for today. Friends, if you have any thoughts on this South Korean stock market crash, please leave me a comment in the comment section. If you enjoy this series where we break down an entire event in 20 or 25 minutes, don't forget to subscribe to TrueView. Here, we bring you the most comprehensive information on events and the most compelling narrative threads. Here, you can get the full picture all at once. All right, thank you all for watching. If you enjoy my show, please forward and share it with more friends. Every interaction you make helps trigger YouTube's recommendation algorithm. And with that, Zhenfei would like to thank you all in advance. All right, that's all for today. See you again at the same time this Saturday on TrueView. Bye-bye.